Basel III, rumors of regulatory implosion and the central banks playing of scenes. In recent weeks, signs of tension surrounding the full implementation of the Basel III endgame have increased. Although the official timeline points to gradual progress by 2026, both in the United States and Europe, the international financial systems behind-the-scenes picture reveals a less clear picture. Quiet but persistent rumors suggest that the real obstacle lies not only in the technical complexity of the regulations, but in the internal resistance of major players who fear the collateral effects of the new regulation on the liquidity and creditworthiness of the traditional banking system. In the United States, the Federal Reserve and the OCC, Office of the Comptroller of the Currency, have been revisiting their own preparatory documents. The initial proposal, which called for tightening capital rules for the country's largest banks, is now facing strong opposition from private sector leaders. CEOs of institutions such as Wells Fargo have publicly expressed discomfort with the lack of definition. One of them even declared that it's a strange way to operate when not even the regulator knows what's coming next. Despite the technical rhetoric, there's a growing perception behind the scenes that parts of the financial sector are playing for time, hoping for a quiet easing, or even a strategic retreat. Across the Atlantic, the United Kingdom and the European Union have also revised their timetables. In the British case, the Bank of England pushed back the implementation of some Basel III rules applicable to investment banks until 2028. The official justification is to protect the capital markets and avoid unnecessary impacts in times of instability. However, experienced analysts note that this type of move tends to be replicated by other jurisdictions, creating a domino effect of postponement. Among the most sensitive points of the new regulatory framework are the end of the SLR, supplementary leverage ratio carve-out, which currently allows banks to disregard treasury bonds and reserves in leverage calculations, and the full adoption of the FRTB, fundamental review of the trading book standards, which directly affect risk assets and required capital calculations. If there is no technical and political consensus on these items, some believe that Basel III could be diluted into palliative commitments, without ever achieving its original intent, to make banks more solid and the system more resilient to crises. Although there have not yet been any formal announcements of a full postponement, the fact is that the market is already working with the hypothesis that the 2025 schedule will not be met. Internal meetings at large banks have been reoriented toward a medium-term strategy, prioritizing internal adjustments without rushing to meet targets that may never be achieved. The official narrative remains one of commitment to stability, but behind-the-scenes movements indicate a concerted effort at containment. At the center of this dispute are the central banks themselves, pressured by a dual challenge. On the one hand, ensuring the credibility of a financial system in transition, on the other, avoiding abrupt ruptures in a scenario already weakened by geopolitical conflicts, asset repricing, and accelerated technological transformation. The countdown to Basel III continues, but the question lingering among regulators, banks, and analysts is whether the clock is truly ticking, or whether it merely marks the time for a reform that, under the guise of firmness, is moving at increasingly uncertain pace. Yet, while the old system struggles with its contradictions, a new model is quietly emerging. The advancement of the ISO 20022 protocol, already underway among central banks and settlement systems in several countries, paves the way for an era of standardization, traceability, and security. On the horizon, the quantum financial system, QFS, looms, with promises of total transparency, asset protection, and real-time monetary sovereignty. What seemed distant is fast approaching. The transformation is not merely technical. It is spiritual, ethical, and collective. A realignment is underway. And despite the noise, delays, and behind-the-scenes maneuvering, we must keep the faith. Because when everything seems unstable, it will be precisely the new system that will sustain the reconstruction. And what was once just a rumor will soon become reality.